Welcome back. The Nifty is holding on to the green. We saw a little bit of profit taking, but it's flat now. The Nifty is closer to 8,050. So after the kind of big move we saw a day earlier, the market seemed to be slowly and steadily building on the gains. Let's welcome in our next guest. We have Mehrab Irani, General Manager, Tata Investments Corporation. He's joining us from our Mumbai studios. Mehrab, thanks so much for being with us at NDTV Profit. Now, the Nifty, after closing at a 7-month low, has bounced back and is now closer to 8,050. Do you think the bottom is made, or would you wait for the FIs to return and the volumes to pick up?
Yeah, good morning, Anisha. First of all, I would like to wish you and all your employees and all your viewers a very Merry Christmas and Happy and Prosperous New Year. Yes, if you see, the Nifty has slightly bounced back over the last couple of days. But if we analyze what has happened, the second quarter result, the top line growth has been around 7%, EBITDA growth around 10%, and the bottom line PAT growth has been almost 8%. There has been around 100 basis point expansion in the EBITDA margin to 20.3%, and the valuation still remain quite above long-term averages at almost 17 times. So what we saw is that there was some kind of a nascent recovery, particularly in the bottom line. After a few quarters, it reported good numbers helped by banks and certain cyclicals like metals, cement, etc. However, because of this demonetization, I think a lot of the spending will get affected. A lot of the sectors, be it consumer discretionary, be it paints, be it autos, be it FMCG, and a lot of other sectors like media, multiplex, malls, and it's real estate, cement. I think a lot of the sectors will get very negatively affected. You know what has happened, that 85% of the money has suddenly gone out of the system, and every week we are pumping 5 to 7% back. So because of that, the velocity of money has substantially reduced. And even today, if we see, almost 90% of the salaries, at least as far as the volume is concerned or the numbers are concerned, is paid in cash. So I think the purchasing power in the immediate term, the velocity of money and money supply will substantially come down by maybe 100 to 200 basis points. So that may result in almost GDP, at least in the short term, coming down by maybe 50 to 100 basis points or even more. So I think there would be some pressure on top line and even margins and bottom line of a lot of different kind of sectors, I think, which we have to be careful. So analysts are predicting almost 15% plus earnings growth for 2018, but I am not sure whether that materializes. And if that doesn't materialize, then the 17 times plus PE multiple just now it can be, slightly stretched at this point of time.
Right. Mehrab, then aren't the markets reflecting all these worries, or do you think there is scope for further fall in valuations?
Yeah, just now we are just worried and we are mentioning all the concerns, but when actually the numbers start coming in, when actually it starts reflecting in the numbers, I think that time another bout of, some kind of nervousness or some kind of selling may further come in at that point of time.
All right. So what are the levels on the Nifty that you're watching out for? Do you think this short-term relief rally can go higher? What would be your strategy? Would you, look to accumulate good quality stocks, or would you wait it out?
Yeah, I think we have to always accumulate good quality stocks. However, at this point of time, it's slightly difficult to make, buying case in a lot of the sectors, a lot of the stocks. Like for example, autos were doing quite good, but because of this, I think there will be marked slowdown. Like two-wheeler, almost 60% sales happen in cash. So that again will be slowed down. Rural slowly was starting to play, after 2 years of bad monsoon. This time the monsoon was good, but because of demonetization, I think now there will be little slowdown in the rural economy also. So a lot of rural economy related stocks will be affected. If you see export sector, that is also facing its own challenges, after the new president-elect coming over there and what are challenges is there. So I think it's difficult to make a case for buying in a lot of the major sectors.
Okay, difficult to make a case for buying. So what do investors do? I mean, you've said there's concern on consumption, there's concern on technology. Where do they put their money, and should they look at booking profits even now? Do you think the markets could head much lower?
Markets might head lower, but I'm not suggesting to book profits. What I'm saying that, we have to identify good sectors, good stocks, and be ready with the list. So whenever, market gives us good opportunity during bad times, I think that would be the time to buy. Like for example, private banks, I think they have done still good. No doubt there were some concerns on certain banks as well, but the retail oriented banks have been doing good. I think there will be slight increase in the retail NPA also because of the demonetization, but otherwise I I think that sector is still doing good. They have maintained the margins and the profitability very well. Some fee growth income might be lower, but that is one sector which I would still look positively. Autos, I was just mentioning, yes, there are concerns, but I think once this plays out, I think the story is still intact, particularly in the PV segment. So I think there also in any kind of correction, if you are getting good stocks and good valuations, I would look positively. Even the global cyclicals like metals, I think there are some positive news. I think after there is some talking about infrastructure spending in the US also, the prices have slightly gone up. If you see non-ferrous, the EBITDA per ton has also risen. It's at a multi-quarter high. So I think there also I would selectively look at opportunities to invest.
Right. Let's talk about private sector banks. Mehrab, you said private sector banks are looking good after recent correction. But don't you think they are a lot more vulnerable to FII selling, which can continue for some time?
Yeah, so that's why I'm saying that currently I would wait for good buying opportunities. Yes, the whole market is vulnerable to some kind of selling, and we have to identify the good stocks and be ready with the list. So I think that would be one of the good sectors in my radar, which I would obviously buy in decent amount of corrections.
PSU banks are expected to get a lot more deposits versus private banks, of course, because of the reach that they have. Do you think that PSU banks' cost of funding will come down significantly? And that could mean that they could perform better in the coming quarters?
Yes, PSU banks, obviously the cost of funding will come down. They will have a lot of surplus cash. Their margins may also slightly improve. But I don't think they have good amount of lending opportunities. If you see the credit growth is very dismal in that sector. Corporate credit is anyway 0%, and a lot of them don't have good amount of retail credit growth also. And plus the NPA problem is still not solved. I think at least we have to wait for 1 or 2 quarters and see how the stress assets and etc. are moving in that sector. No doubt the valuations continue to remain cheap in that sector. But I think I would still wait and see the result and how the stress assets is playing out before putting serious money into that sector.
The point that you made that lending opportunities may not be very high for PSU banks. In such a scenario, if they get a lot of cash or deposits, you think it could work negative for margins?
Yeah, I think that is what is happening, at least in the short term. I think they are as flush with all these funds which has come because of demonetization, and nobody is expecting them to come. So I think in the short term their margins can affected. Even their fee income can get affected because a lot of this was related to fee income, and now that may also get affected. So yes, but one more positive thing for them is that GSEC markets have rallied a lot. So because of that, that treasury incomes will be doing good. So if they can utilize the treasury income up to a certain extent to write off their bad assets, I think that would be one of the positive for them.
NBFCs is one space where people were bullish. A lot of correction has happened. As we are talking about the financial space, you think NBFC warrants to be an overweight after correction?
If you see, yes, NBFCs had a good amount of correction, but if you see before that, they had a big amount of rally also. So a lot of the valuations in a lot of the NBFC pockets were actually not justifying their quality or the growth. So I think I would still be slightly cautious on the NBFC sector. A lot of the sector like microfinance within them was dealing up to a large extent in cash. So I think their business will be under seriously affected. The gold finance companies would be affected. Even the housing sector, if there is any amount of slowdown in the housing sector, in the real estate sector, anyway the real estate was going under some amount of decent slowdown. And if the slowdown continues for more quarters, then I think even the housing finance companies and certain NBFCs which are commanding very premium valuations, I think their valuations may still moderate even from here on.
As far as NBFCs are concerned, Q3 would be weak, Q4 would be weak is something which now probably prices are factoring in. Do you think models for MFI or probably some of these rural-based NBFCs can change significantly, and that's why market is worried?
Yeah, I think so. We are talking in a country where actually the secured lending is under pressure. Today all the stress in the corporate sector is mostly coming from the secured lending. And there we were very positive on a lot of these microfinance companies which actually do unsecured lending in cash at very high interest rates. So that business model itself I was not sure about the long-term sustenance of that business model. So I think we have to wait and watch and see how this plays out actually.
Right. Let's talk about the metals pack as well. You briefly mentioned that metal prices going up. That is something which is probably making you like the metals pack. But don't you think a lot of it is already factored in? Metal names have not corrected?
Yeah, you are right. Metal names have not corrected, and they may not. They may actually outperform also if any kind of correction happens. Because if you see before this whole thing, metals had underperformed a lot. So I think last few months something good is going on for them. So I don't think they should be. They will correct it. They were one of the positive contributors to the Nifty earnings growth also, because they all were coming from a low base as well.
Right, Mehrab, when it comes to consumption, you said, the impact on passenger vehicles may not be that much. What does one do with two-wheelers? What does one do with other consumption-related names like paints or sanitary ware? Nobody's taken the money out of the consumers' pockets. If you're doing digital transactions, the money is still available to you. And once demonetization happens, demand should bounce back, given that paycom areas are coming through and the monsoons have been good. What do you do with these kind of consumption names?
Yeah, see, two-wheelers, as I mentioned, almost 50 to 60% volumes used to happen in cash. So obviously that will be affected at least in the short term. Some amount of growth we were seeing, as even the management commentary in the second quarter, that rural economy is growing because of good monsoons. But again, because of this demonetization, at least there will be some slowdown over there. So I think two-wheelers overall, I am positive in the medium to long term. But in the short term, how this plays out, I think we have to watch. Even the paints companies and a lot of other FMCG companies, like I think HUL had mentioned that in the first 10 days, almost their sales were down by 80% after the demonetization announcement. So, and a lot of these consumer sectors are, are currently trading at very premium valuations because they command very good ROE and ROC ratios. So, if there is a volume slowdown, which was already seen even in the second quarter results, a lot of FMCG companies' volumes were quite not very positive. So, if the volume further slows down, then I think we have to be little sanguine about the high valuations which they are doing. So I think I will wait and watch the results and then decide what to do about that.
Right. Would you also put cement in the consumer names, because cement has also done very well, or would you treat it differently? Do you think it's more of a play on infrastructure and public spending? How would you look at cement stocks, which have corrected quite a bit now?
Yeah, actually, if you see cement stocks, the market was quite bullish and there were good estimates about good profit growth and pricing power in that sector. However, if you see after this move, I think the real estate sector is further expected to slow down. And even in the infrastructure space, I think besides certain amount in roads and railways, we are not hearing any big, public expenditure, public spending in the infrastructure space. So I think cement, as of now, again, I am although I was positive and look at it positively, but as of now, I think I will be wait and watch for that sector as well.
So are there any stocks or sectors where you do see good value even at these levels? So would you look to pick up something?
Yeah, as I mentioned that private banks, I would still see that they have a reasonably good value. Autos at any kind of correction, I think I will look at them. Metals, mining at any kind of correction, I would look at putting money in this. And in the pharma sector, I would be quite selective, although they are also facing problem. But if you see, because of this demonetization, the slowdown, and the US economy being quite strong, the US dollar being quite strong, and the interest rates going up in the US, even the US treasuries have gone up by 100 basis points over the last few weeks. So I think the rupee may further weaken and go to 70 per dollar or something. So I think that should benefit the export related sector.
In terms of mid-cap space, if you look at 2016, mid-caps probably have done better than large caps, and select mid-caps have really done well despite the correction. Do you think mid-caps would continue to give better returns in 2017?
Yes, I think so. If you see 2016 was a year of mid-caps. If you see on beginning of 1st January, Nifty was close to 8,000. Currently also we are close to 8,000. So the Nifty has hardly given any return during the full year. But a lot of mid-caps have outperformed and investors have made serious money in a lot of mid-caps. So yes, mid-caps I would continue to be positive. But I think we have to be much more vigilant, much more selective in the mid-caps. It would not be a broad-based rally in mid-caps as it was in 2016. So 2017 may be a little more challenging. So you have to be a little more cautious in which stocks, which sectors we invest in the mid-cap space as well.
Right. In terms of mid-caps, you mentioned about the large cap sectors like pharma, probably IT, some of the other ones. What are the mid-cap sectors that you like?
I think the sectors would be more or less similar, but in mid-caps, obviously, there are opportunities in individual stocks. So I think we have to do more of a bottom-up approach when we do in mid-caps. It can't be just asset allocation, it can be in large caps.
Right. Going into the budget, what would you probably be tactically overweight on? Would some of the PSU, tobacco names interest you going into the budget in first week of Feb?
Yeah, I think tobacco, as you mentioned, I would be positive. I think the valuations are quite decent, at least in that space within the FMCG sector. Also because of GST, I think they will benefit by at least 400 basis point or more in the taxation front. So either they can pass on that to the consumer, or it will help them in fighting the contraband sector, or it would actually they can increase the ad spend and hope to increase the volumes over there. Also, if you see the tobacco, after a long time in this quarter, they reported quite positive volume growth also. So I think that is one of the sector which I would be positive and look to buy stock at decent valuation.
And tobacco within the pharma space, within the FMCG space would be one of the names in terms of valuation would be very attractive now?
Yes, I would think so, that tobacco within FMCG would be quite attractive, and I think a lot of the positive factors are going on for that. So I think they are coming out after a few years, where there was a volume growth was negative or very bad, and now I think they are coming out of that. GST would also positively impact them. So I would be very positive on tobacco.
Real estate is one space, Mehrab, which people have just forgotten. Yes, there will be an impact of demonetization. But do you think that valuations are already factoring in? Because in 2008, when markets or real estate stocks started to fall, valuations were very high, balance sheets were pretty stretched, people were very aggressive. It's exactly the opposite now?
Yes, it is the opposite, but I am still not sure whether the valuations are fully reflecting it, and how much amount of slowdown will be there in the real estate. They are already suffering for the past few quarters. The sales are down by almost 30 to 50%, and because of this, how much impact will further happen? I am really not very sure, and I don't know how to actually value them. So I would still, as an investor, I would still stay away from that sector.
Right. Another contra name or another contra sector where people are suddenly negative on is the entire rural space, because of course, the cash crunch that one is expecting in rural economy. You think there, one can go ahead and be slightly overweight?
Yes, we were quite bullish on the rural play and the rural sector as it was emerging. Because of the demonetization, there will obviously be some amount of slowdown in that sector, because cash is more prominently used in the rural economy. But I don't think that, there is comparatively more black money in the rural economy. It's only that, agricultural income is tax-free, and it's just that way. So I think rural economy, yes, there will be some amount of problem obviously because of this. But I think we should be look at positively for opportunities within that sector.
In the FMCG or in the rural space, one sector that was very popular was consumer durable. You think now focus will shift on traditional FMCG names, something like a HUL, something like a Godrej Consumer, the traditional FMCG names would tend to do better?
Yeah, consumer durable, I think at least in the short term will be affected more by the because of the demonetization than the traditional FMCG. So yes, in the short term, I think interest may more shift towards traditional FMCG, but there also we have to be cautious. Like like you said, HUL, I think the volume growth in second quarter was not at all good for that company. So we have to be cautious, and we have to see within that sector, which companies are going to do good.
Right. Let's talk about the IT pack as well. In terms of valuations, do you think IT is one of the best when you compare it to Nifty or any other large cap stock within Nifty?
Yes, we keep saying about the concerns within the IT sector, but if you see the valuations for a lot of the large cap companies also, they are quite decently valued, and I expect rupee also to slightly weaken. That would again help their margins. Yes, there have been some concerns about the US, the new president coming over there, and also about after the Brexit fallout, the BFSI sector has slowed down, so the orders have slowed down for the IT sector. Those concerns still remain, but I think as a sector, they have a lot of tailwinds going for them rather than headwinds. So I think I would look positively at the IT sector.
In terms of expectation for IT sector to grow, whether dollar index goes to 110 or 100 or wherever it goes, you think the growth expectations are very, very low from IT sector? That's why chances of a positive outcome are slightly higher?
Yes, I think so. I think analysts are quite sanguine about the growth in the IC sector as compared to a lot of the other sectors. So the chance of a positive surprise is always there in the IT sector.
Right. So one should tactically be overweight on large cap IT?
Yeah, I think so. It would make sense to be slightly overweight on large cap select IT stocks.
As of now, there are very limited digital plays as far as listed market is concerned. But some of the companies like TCS, when we speak to, they say that 10% of their revenues is now digital. Some of the companies like Tech Mahindra say that they are investing heavily into the digital space. You think digital could emerge as a very big growth driver for some of these large cap names?
Yes, digital could obviously emerge as a growth driver, but as you said, the opportunity to invest in that sector as far as stock market is concerned is quite limited.
Right, but digital for any of these traditional names, they could go ahead and do some work for them. They could invest a lot. Margins there could be higher if they are growing. That could be a big trigger, or it's very small now?
As of now, I think it is quite small. I think to move the needle, it will take some time.
Right. Let's also just talk about the oil sector for a bit. You think oil as a sector can do well? Companies that produce oil, they have been under slight bit of pressure for some time, at least for about last 3-4 years. Do you think that's a sector which can do well from here on?
Yes, oil can be another outperforming sector. You know, with international oil prices also firming up, I think oils, if the government puts its measures right, I think oil can be one of the sectors which I think and it's a large sector also. Its weightage is also quite high. So I think that can be one of the sector which can outperform and pull the Nifty.
Right. In the near term, Mehrab, it will be all about flows, right? We spoke about FII flows and why FII flows can be vulnerable. But are you surprised with the sort of DII numbers that we are getting? You think that can continue?
Yeah, I think because the DIs have benefited a lot because of demonetization. I think we all know how much money has gone into the banking sector, and some amount of money is also flowing to the mutual funds, to the insurance companies. I was reading some report that, you know, insurance premiums are up between 50 to 70% for different insurance companies. So I think, and even mutual fund AUMs in equity are at all-time high. So I think the DIs have benefited a lot, and that is what we always wanted. We always spoke that, you know, the DIs have to be a reasonably big sector. India has to invest, and that is all I think what the government also wants, that the common man should invest, should participate in the financial markets, and it is always best to participate through the DIS, to the mutual fund route. So I think that is one of the positive things which has come out, and I think it should continue going forward as well.
Mehrab, just a last word on 2017 outlook. You mentioned earlier that numbers could be weak, but as far as Nifty is concerned, do you think returns could be positive from here on?
Yeah, as I said, you know, 2016 calendar year was actually from point to point on a Nifty basis, we are actually there only. We were close to 8,000 in the beginning. We are currently there. In 2017, I think there can be a there can be some kind of a correction once, you know, the results actually start showing the bad numbers. But beyond that, I think in the long term, demonetization, etc. should benefit, because, you know, a lot of the parallel economy, which we don't know, we talk 40 to 50% is parallel economy. Even if some amount of that comes in the actual GDP numbers, I think that would be very big positive, but not now, but over the medium term. Also, if the tax to GDP ratio, I think, will improve because of this. And if there is some amount of, you know, carrot and stick approach, and some amount of corporate and personal taxation rates are brought down to encourage more people to come within the net. So I think whole net, it would be long-term positive. And if that happens, I think the markets will also start reflecting it maybe in the second half of 2017.
Mehrab, thank you so much for taking out time for us. Always interesting to get your views.